We have the exam practice for chapter 9, correction of errors. Question 1. They said, no one extracted the trial balance for his personal delivery business on 31st of August 2018. The books of account contained errors and the trial balance failed to agree. That means there's errors in trial balance. On inspection of the books, no one discovered the following. 1. The revenue day book has been undercast by 3,500. So if the revenue account has been undercasted, that means our suspect account will be debited for 3,500. Then the revenue account will be credited for 3,500. I think that one is clear. Then the second one, they said, discount received of £500 has been debited to the discount allowed account. So for that debit entry, that means you have to double the discount.
This suspense.
You have to double it. That means discount allowed. You have to credit discount allowed. You have to credit discount received.
Yeah.
So those two transactions gives you the suspect account.
You credit.
You debit suspect account for the 1,000, and you credit discount allowed,
Yeah.
and you credit discount received account.
Yes.
Is it clear?
Yeah.
Then the third one. No one had withdrawn 200 cash for his own use. For his own use, because no one is the owner of the business. It represents drawings. No entries have been made. That means there's error of omission. So you debit drawings account, you credit cash or bank account. Clear?
Yeah.
Then the next one. Purchase of 530 on credit from Shui had been recorded in the ledger account for Sean. The transaction was right, but it is a wrong account class. So that means you have to debit, because Shui was credited instead of Sean. So you have to debit Shui and credit Sean.
Okay.
Is it clear? You add it here, please.
You credit.
Debit Sean and credit Shui. Is it clear?
Yeah.
It's credit and debit. Then the next one. General expenses of 5,000 off. Sorry. General expenses of £552 had been correctly recorded in the bank account, which means the bank account is fine, but has been recorded as 225 in the general expenses account. So you find the difference between the two accounts. So the bank is having 552 and general expenses account is having 225. Yes. So that means general expenses is short of the difference, which is 327. So you have to debit the general expenses account with 327 and you credit the suspect account with 327. So when you credit the suspect account with 327, that means you are taking 327 away from the suspect account. So in the suspect account, 327 will be on the credit side.
Okay.
Do you get that?
Yeah.
Then question 6. The purchase of new motor vehicle of £18,000 had been recorded in the motor vehicle expenses. Both transactions are right, but it's different. That's error of commission. No, motor vehicle. Error of principle, sorry. So motor vehicle instead of motor expenses, that's principle.
Yeah.
So both of them are assets. Both of them are debit entry.
Mm-hmm.
But you just have to credit. Now you have to debit motor vehicle account and credit motor vehicle expenses account.
Okay.
Is it clear?
Yeah.
Motor vehicle account debited, motor expenses account credited.
Okay.
Now they said depreciation is charged at the rate of 20% per annum using the straight line method. So depreciation is charged on the purchase of motor vehicle. So 20% of 18,000 is 3,600.
Yes.
So you debit the depreciation account in the income statement for 3,600 and you credit provision for depreciation on the credit side. Is it clear? That's 3,600. Question 3. Question 2, sorry. They said, prepare a suspect account for the correction. Let me have that, please. So this is a transaction for the journal. Now, they said we should prepare a suspect account for the errors. For the suspect account, we have the revenue account, which is undercasted. Mm-hmm. To be on the debit side of the suspect account. And we have our discount, now 1,000 on the debit side. Then on the credit side of our suspect account, we have 327, which is the difference between the general expenses. You know, expenses is a credit balance. Income is a credit, it's a debit in the journal. Okay. So now the expenses account we have 327, which is in the suspect account. Then the difference between the debit side and the credit side give us our balance brought down. So 3,500 revenue, which is undercasted with discount of 1,000. gives us 4,500. 4,500 minus 327 will be our balance brought down in the disbursements account, which is 4,173. Is it clear?
Yeah.
Now the next question says, state the type of error in points 3, 4, and 6. Point 3, no one had withdrawn £200 cash for his own use. No entries had been made. That is error of omission. Clear? Then point 4, purchase of 530 on credit from Shui had been recorded in the ledger account for Sean. That is error on the wrong class of account, which is error of commission. Then we have 6, the purchase of new motor vehicle for 18,000 had been recorded in the motor vehicle expenses account. That is error of principle. Any question about it?
No.
So that ends chapter 9, correction of errors and the exam practice.